Moon math in crypto isn't unusual. Here's the thing. Sometimes those wild predictions, they actually come true. And in the case of Bitcoin, it's not just some crazy fantasy. No. And we can make things up if we want, but we've had some pretty bold price predictions over time, and some of them have been hit. And we're going to hit more. The $1 million Bitcoin. It's coming, guys. Maybe by as soon as 2030. And I'll tell you exactly how it happens. So, number one, how do we get to $1 million Bitcoin? Fixed supply meets exponentially increasing demand. Bitcoin, as you know, has a hard-coded maximum supply of 21 million coins. Almost 95% of them have already been mined. Estimates range from 3 to even 6 or 7 million lost forever. Probably on the lower end of that scale. We do see old whale wallets waking up from time to time. Those guys are still out there, just sitting on billions of dollars. And with every halving, new issuance is cut in half. So right now, annual supply growth is down to around just 0.83%, making BTC the most deflationary asset basically you can get your hands on. This fixed supply dynamic is unique in global finance, and we're now starting to see the floodgates of demand opening up in terms of institutional and just corporations and all these different players coming, big whales, countries, it's nuts. Swan Bitcoin CIO Ben Workman has estimated that a third of the Bitcoin supply could one day be owned just by corporations. Matt Hugan of Bitwise explained earlier this year that the majority of institutions who need to own BTC haven't bought it yet. He suggests that $1 trillion of buying gets institutions just up to a neutral portfolio, and that this level of capital inflow would push BTC above $1 million per coin. You have to remember, $1 trillion coming in doesn't mean that market cap rises by $1 trillion. It has a much larger impact than that. By the way, he puts the time span of all this at 5 to 10 years, or just a couple of cycles away. So 2030 is definitely in play. Maybe 2032. That's technically the 2 bull markets away sort of thing. So we've got supply, we've got demand, along with the next point, of course, institutional and sovereign adoption, which is totally going crazy right now. Obviously, we have the ETF equation, and even though they only launched around a year ago, as we talked about extensively here on the channel, they already hold 6.7% of the BTC supply after just a year. BlackRock's IBIT is generating more revenue than its S&P 500 fund, and the Bitcoin ETF launch is basically the most successful ETF launch in history and is now one of the biggest ETFs in the market. It's insane. Then there are treasury companies with, of course, very famously Strategy now owning 2.84% of the supply of Bitcoin. They're continuing to buy. But the number of companies buying or planning to buy just keeps growing every single day. Speaking of Strategy, Michael Saylor made the point recently that BTC has got through its riskiest period. It's a 100% legit asset now. And that means that banks can custody Bitcoin. We just got news today that one of the biggest banks in Spain is now selling Bitcoin to their customers and offering custody. In the US, also, accounting rule changes have allowed corporations to add Bitcoin to their balance sheets, which we now see them doing en masse. Seems a new announcement almost every single day at this point. International companies following suit. And Saylor also mentioned Bitcoin's limited supply, explaining that 450 BTC are mined each day, which is currently around $50 million a day in incoming supply, which is not that much, okay? That amount isn't being entirely bought up by Bitcoin treasury companies literally every single day, plus ETFs, plus corporate endowments and pension funds and all the other stuff going on, okay? The next part of the puzzle, of course, will be countries. Now look, El Salvador is famous. They've been stacking Bitcoin since 2021. Bhutan's mining. 3 U.S. states have passed strategic Bitcoin reserve bills. Texas actually saying they're putting their first $10 million towards buying Bitcoin, which is a nice little start. A national reserve in the U.S., they passed the bill. Is there any Bitcoin in it yet? We'll find out. Even a small percentage of global sovereign wealth flowing into Bitcoin can create enormous price pressure. Brazil likely to pass a bill on that this year as well. So essentially, we're looking at capital rotation from traditional markets into Bitcoin. And before we break down the rest of the story, guys, if you want to save thousands of dollars on trading fees, that's you, big traders. I'm looking at you guys. Then use the link down below. It's going to get you straight to VIP level 2 over on Femex. You get a 50% discount on your spot maker fees, 40% off of your futures maker fees, and access to up to $30,000 in trading and deposit bonuses. It's fast, it's secure, and it's available worldwide. Femex has the liquidity, the trust, and now one of the best offers in town. So get in while it lasts. Link down below. And now let's talk about narratives, because narrative-wise, this This can occur because BTC is being rapidly repositioned as digital gold, but with way higher upside and other advantages, of course, over the precious metal. Now, obviously, gold has certain use cases in computers and stuff that you just can't replicate with Bitcoin. But when it comes to a store value, portability, divisibility, fixed, scarce supply, Bitcoin wins hands down. And on this note, Matt Hugan from Bitwise, while talking about institutional buying, also explained how digital replacements always take over from analog products after a period of initial skepticism. A good example of this is streaming services and Netflix rise, while of course Blockbuster is now a nostalgic memory. Gold is the Blockbuster of investments. Shit, it's a good analogy. It also seems almost inevitable that the same process will occur, okay, or simply is occurring right now for store value assets, aka gold versus Bitcoin. Bitcoin is coming out as the digital upgrade to gold. So then what we'll see from here are network effects playing out. If Bitcoin adoption follows a classic S-curve, and we're at the start of the early majority phase right now of a new technology, then it becomes apparent how much more space there still is for BTC to expand into. But also, if we just look at the charts, we can see something very interesting. So let's talk about repeating cycle structures and reduced volatility. So in every cycle up till now, Bitcoin has followed a relatively familiar clockwork-like 4-year pattern that seems to generally rotate around the Bitcoin halving. In 2015, 2017, 129x gain from bottom to peak. 2019 to 2021, it was a 22x gain, again from bottom to peak. Pretty nice. So then if the 2022 bear market bottom of 15.5K makes, let's say, a 12x move by the peak of the cycle, we get $186,000 Bitcoin, which is a number we've heard bantered about a few times. I think we go up to 250K, maybe even potentially higher. But let's say that in a post-ETF corporate treasury sovereign state rotation era from gold into Bitcoin, the bear market is simply less catastrophic when BTC was younger and 100K forms the next bear market bottom. That means that in the following bull run, a 10x would take us to $1 million. Markets are changing. We can't rely on analogies of the past. Reality is that Bitcoin's grown up. Bitcoin's a big boy now and is following the gold ETF parallel, where it basically went on an 8-year straight bull run. Plus, the stock market still has at least 2.5 years as they reach an average age of a bull run. And we're correlating more and more with the stock market. Plus, currently we've got supply on exchanges at 7-year lows. OTC desks are running out of coins. And if we check the on-chain signals and indicators like the MVRVZ score, the Pi cycle top indicator, the net unrealized profit loss indicator, everything's calm and normal. No top in sight on any of this stuff. Even though we're comfortably sitting around $100,000, where the heck is everybody, man? It's very quiet out there. The market is not overheated even at 6 figures right now. Ultimately then, a $1 million Bitcoin is going to happen. And it comes down to simple math. Take that 21 million coin supply, put $1 million price tag on each coin, and what are you going to get? You're going to get a market cap of around $21 trillion. Then compare that to the market cap of other assets. And what is Bitcoin competing with? It's competing with gold. Gold right now is approximately $23 trillion. The global bond market's around $141 trillion. Global equities around $124 trillion. Global real estate expected to reach $654 trillion this year. So in this situation, does a $21 trillion Bitcoin market cap really seem that absurd? Putting on parity approximately with where gold is now, capturing just 2 or 3% from traditional asset pools amid inflation and currency debasement worldwide and growing adoption and hype around Bitcoin every single day, it would all put Bitcoin cleanly over the $1 million mark. And if you're still not convinced, then just remember what BTC has already done up until now. Everybody always said it was impossible until it was done. We're never going to hit 10K. We're never going to hit 100K. Here we are. Every supposedly crazy price target has been hit, and they're going to keep being hit until a certain point. When we start hear people call for $100 million Bitcoin, maybe then we need to chill out a little bit, guys. But $1 million Bitcoin is coming, make no mistake. Because when it comes down to it, Bitcoin is and will always be the hardest asset on earth. Don't fade it. I hope you have some. Thanks for watching.